Hey everybody, it's me, Gregory Mannarino. How are you today? It's Friday, March 9th, 2018. Okay people, so apparently, we got some good economic news today with regard to these jobs numbers. Alright, let's talk about what this news triggered. Well, hopefully, again, you're watching this video right on my website, traderschoice.net. If you're not, please have a look at my website and go look at the chart of the bond market. You will see a couple of big red lines. Now, this might seem kind of strange to some, but allow me to explain what's going on here. So this news triggered a sell-off in the bond market. Okay. So, in this context, okay, this is where this becomes kind of like an art form. When you see the bond market sell off on news like we got today, and then you see stocks, boom, rocket up, that's cash moving from the bond market making its way into the stock market. You always have to look at things in context. Okay, so this week, especially yesterday, we witnessed a propping up of the bond market, which was frankly off the Richter scale. And the desired effect was, again, to keep the stock market moving higher. Now that they have established this, again, see, the stock market is kind of like a person that needs to be repeatedly reassured. Think of it this way, that everything is going to be okay. It's like a child. It has to be treated like a child. Market participants are like babies, all right? And they have to constantly be, promised that things are going to be okay. This is the truth. This was the message that the bond market was sending to the stock market all week. And I said to you last Friday that this market was going to go up higher more than likely, and that's exactly what has gone on. Now, the market did not close yet. Obviously, this is early. It's 7:20 in the morning here on the west coast of the United States. But I think this trend is going to continue, and I have put my cash where my mouth is. I posted these positions here all over my social networks at the time, or darn close to the time I entered each one. This is the ticker symbol, this is the expiration, and these are all just in the money. I always buy just in the money. Now, you can buy out of the money if you want. You could buy deeper into the money if you want. This is where it's really up to you to decide on risk. If you're buying out of the money, you're willing to take on more risk, and also you can make more cash. You see how this works? If you're buying deeper in the money, less risk, but less reward. So I kind of like skate along that fine line. And these trades right now are up nicely. You all probably saying to yourself that know my work, hey, wait a minute, why is Greg doing this? Greg doesn't like to hold positions through the weekend, and you would be absolutely right. But, like I said in yesterday's video, I am very bullish here on the market into next week. I think this market is going to gain into next week, so I want to jump ahead of that. Could I be wrong? Absolutely. I'm willing to take that risk right now. And we'll just play this out accordingly. It's that simple. I will not be closing any of these positions today. Generally, like yesterday, I entered a day trade, 2 day trades. I posted the entries and exits. Did really well yesterday. I think I pulled out a 28% profit yesterday. But today I'm going to hold on to these through the weekend. I'm just really bullish here. I'm obviously very bullish on financials. XLF, the financial ETF, JP Morgan, and then also SPY, the ETF that tracks the S&P 500. So let's keep an eye on this, people, today. Very, very important. There's a lot of cash to be made here. The dollar is weaker as well. That's bullish. People keep asking me that. Why is a weaker dollar bullish? It's very simple. The weaker dollar is good for multinational companies. And the market is supposed to, well, in a real market, be responding to earnings, which I can pretty much put your minds to rest and tell you that however it happens, whether they rig these numbers or whatever it's going to be, earnings are going to come in good. That's just the way they say. The market's fake. You know that. They have to maintain the facade. You got it? And that's what they're going to do. So you and I, our strength is knowing how fake this all is. It's the truth. Metals are higher today. Who knows what they're going to end up doing to these things? I don't care. You know that these are long-term investments. They're not trades. You just hoard. You bet against the debt. You become your own central bank. Since day one, I've been saying this, and that will not change ever. All right. So with that said, we're gonna put all this together at the end of the day. It's going to be a fun wrap up, and I will see you then. Over and out.